You are listening to ChartingWealth.com for Tuesday, the 16th of May, 2017's markets closed up on Monday. When we look at the S&P 500 and the NASDAQ 100 as represented by QQQ, we see that gold was up, bonds were down. Now let's jump into the weekly charts first on the S&P 500. Interesting fact, as we look at these charts and see where the highs have been over the last 4 weeks on the S&P 500 for the week ending the 28th of April, the high, $239.53. The following week, May the 5th, $239.72. The following week, the 12th of May, $240.19. And where are things as of Monday at the end of the day? $240.44. We've been right around $240 as the high for the last 4 weeks as these charts have been moving up. Now, what makes it really interesting to look at the value of the MACD, the PPY or PPO, the price percent oscillator, is that it has never crossed over going up. When you look at the charts, it looks like the market's just soaring up. But when you delve deeper and you look at the candlesticks, you can see that it's been hitting about the same high point throughout the week. And we can see derivative oscillator is losing its downward momentum, but we still haven't had a crossover going up. Is this market getting old and tired? Well, something is happening in this market. We can see that as time moves along and the market slides sideways, we can see the Bollinger Bands are getting closer together. They're not nearly as widely separated as they were back in mid-March. So things are tightening up. What is going on with the market? Is it getting ready to roll over? Don't know that. Could be just gathering steam, but it's interesting to look at, pay attention to, and watch on that big chart. Remember, all things being equal, the market tends to move in the direction of the largest chart. What do we see going on the 2-day chart? Now remember, the weekly trend is still down. It's been broken. It was broken way back on the 2-day chart, all the way back on the 25th of April. And of course, it shot up, and then, as we can tell, it's been sliding sideways for several days. It actually did close above the old 2-day trend line, but just barely. We see derivative oscillators losing its energy. We do see that still going up. There's no crossover going down on the 2-day chart, but let's just keep paying attention to things. This is just the first day of the latest 2-day chart, so we'll continue to watch and pay it. The last day of the latest 2-day chart. We'll continue to watch and see how this new candle forms. So just pay attention, my friends. Always look at that weekly chart and see what it's really telling you. So, and again, the PPO, the old MACD, and of course we calculate it a little different. It's more valuable to us. But those of you familiar with the MACD, the Moving Average Convergence Divergence Indicator, you know that the price percent oscillator is calculated virtually the same way, except the nice thing about the PPO is that it allows us, because of the way it's calculated on absolute, it allows us to compare across the board. Stocks with indexes, indexes with indexes, you name it. It's a percentage. It is not simply the old moving average convergence divergence indicator that over time can give you some inaccuracies. Want to know more about that? Go to our training on the PPO that's available there at chartingwealth.com's website. It's one of the newer trainings we put up. Let's keep moving through these charts before we run out of time. What do we see going on in the Qs? Of course, we're in the Qs. The Qs, we jumped in at the close of the week, back on the week ending the 28th of April, that last Friday in April. We jumped in that following Monday. Things have been going like gangbusters. We are very happy with the way things have been happening since that weekly vertical crossover. We jumped in somewhere around, 133, 134, something like that. And of course, things have been as high as 139.12 throughout the course of the day on Monday. So things are continuing to move up. We like the way the Qs is working for us. We see derivative oscillator continuing to gain energy, and of course the PPO is moving up. Let's look at the 2-day chart and see what it tells us. Of course, we're still above the 2-day trend line as far as our closing goes. Derivative oscillators losing a little energy, so we'll continue to watch that. But again, long as the price movement keeps going up, we will be happy with that. For the record, up 0.31%. We are in this trade when we see the 2-day and the weekly vertical crossovers going in the same direction. We are happy campers, my friends, happy campers. Okay, now let's go back to our weekly chart. Take a quick look at TLT. Now remember, we're still in a confirmed up move, and we look at that weekly chart. Don't forget, it originally crossed over going up back on the 3rd of February. Went up just a little bit, then dropped, then started up again, and has since started losing that energy. We can see that the derivative oscillator is losing energy, still positive as far as the price percent oscillator goes. And it was a bit of a down day. Of course, the 2-day candle does not reflect that because of the up movement on Friday. If we look intraday, let's see what we see here. Of course, we can tell that there was the 2-day vertical crossover going down back on the 1st of May. And we've seen things, and this is actually a break in that downward momentum as far as the latest 2-day candle goes. But one 2-day candle does not mean a change in trend. We do see derivative oscillator losing downward momentum. So if it crosses over going up and starts moving in the same direction as the weekly chart, the weekly PPO, then of course we might look to jump back into TLT going up. But unless that occurs, we are not in TLT right now. Let's go back to this weekly chart, look at our last chart, and we look at gold up 0.27% for the day. Gold just crossed over, going down as far as where things are on this weekly chart just for the day on Monday. Those of you wondering, at the end of this past week, we did not have a confirmed crossover. This is what we see happening as far as price movement with the start of the week. This could change throughout the course of the week. This is just the first day of the week. So we'll wait and see. If we do have a confirmed weekly vertical crossover by the end of the week, we will let you know. That did not happen as per the week itself. Now remember, if that happens, then we will move our weekly vertical crossover line from where that occurred going up all the way back on the, let's find that date, on the 27th of January. That may very well be confirmed and happening throughout the course of the week. If we look more intraday, well, of the last 2 days, we see that actually the market was up on Monday. It actually broke through the 2-day, well, came close, not quite to breaking through the 2-day trend line, but that 2-day chart still in a down move. Derivative oscillators lost some energy, but it is not moved up at this point. But if it does, then it may give us a jumping in point. But you sure don't see that happening when you look at that big weekly chart. However, let's delve into the look. Do you guys remember what we saw happen over the course of the day toward the end of the week as we had that crossover going up on the 4-hour chart? We've talked about how prescient that is. Well, it continued that up movement on the 4-hour chart on Monday morning, on the morning of Friday, the 12th, and on Friday afternoon, and on Monday morning, and on Monday afternoon. We had that crossover, remember, this last Thursday. And we talked about that, how we saw that happen on Friday. And as I have spoken about for many, many weeks, hell, over a year and a half now, when we look at how prescient this 4-hour chart is, it typically does pretty well for us. Not as good necessarily on the up moves always as the down moves, but we have seen times where it has really, really done well for us. But just continue to follow that 4-hour chart, and you might want to play around with that on some practice moves because it has done it has just done gangbusters again and again and again. Around Christmas time, we've seen some trouble with it not working until early to mid-January, but then that 4-hour chart starts working again very well. And of course, after this latest down move, it turned right around and actually started working again. So pay attention, give it a try, see how that 4-hour chart works for you. When we find magical charts like that out of the blue that work in and of themselves and by themselves, we pay attention to them. People say how long? Till they don't work anymore. That's where we are as we end the day on Monday. Hope that you had a great start to your week. Stay with us. Watch that Q's trade as it continues to make money for us. And we'll see how these other charts work out, both gold, 20-year bonds, and the S&P 500. If you've not already subscribed to our podcast, man, you need to, because with that, you will get our How to Read a Stock Chart video, a link to that, our daily market and weekly market worksheets, our trade worksheet, and you'll get the layout that we use at freestockcharts.com. All that is available to you at the chartingwealth.com website. God bless. All the best from us here at chartingwealth.com.